House prices are rising, fixed rates are bouncing back up, and mortgage borrowing has just dropped by over 13 billion. So if you're sitting on the fence, you might want to tune in. This week we've got a mixed bag of lender updates, with some pushing rates up and others trimming them slightly. Halifax is making affordability a little bit easier for some people, in particular NHS staff, but the Bank of England's latest figures show a serious slowdown in borrowing. And while house prices are still growing, that momentum may be shifting depending on who you ask. So let's start with rates. Empowered have shaved down their 3-year fixed rate products, which is great news if that is your preferred term. But that's where the good news ends, because Halifax and Accord are both nudging their rates up, and Santander, well, they're sitting on the fence with a mix of reductions and increases. So that little window of falling rates that you heard everybody talking about in recent weeks, that's pretty much wiped out. We're back to where we started, and the trend is edging upwards again. The message is therefore very clear. If you see a decent deal, don't hang around waiting for something better, because that delay could literally cost you thousands. Now, looking at lender criteria changes. So the Halifax this week has made a really positive move, improving their income policy to boost affordability. And this is especially helpful for NHS workers. It could mean more borrowing power or access to slightly better products for those in that sector. So it's always worth checking in with a broker just to see if this change has opened up any new doors for you. And looking at the wider economic context, the Bank of England's latest money and credit report shows that net mortgage borrowing plummeted by £13.7 billion in April. That's a huge drop from the £9.7 billion increase that we saw in March. So what's actually driving that? Well, to be honest, it's most likely a sharp correction that we've seen after the March stamp duty incentive rush. April was the come down, and in my opinion, this might just be the market realigning itself. On the property front, Nationwide's house price index shows annual house price growth rising to 3.5% in May, with monthly prices up by 0.5%. But the Halifax, they tell a slightly different story, showing a 0.4% monthly drop and slower annual growth at 2.5%. Of course, this is confusing, but the overall message remains the same. House price fluctuations are perfectly normal, but the long-term trend is still upwards, and the average UK house price now sits at just under £297,000. So whether you're a first-time buyer, somebody looking to move home, or a seasoned investor, this week is a real reminder that trying to time the market rarely pays off. Rates can rise overnight, and prices tend to move steadily north due to limited housing stock. It's not about when, it's about how long. The sooner you're in the market, the better your position tends to be over time. So are you locking in your rate, or are you still waiting for that special deal? Drop me a comment and let me know what you're seeing out there. And as always, don't forget to follow for next week's update, because there's always something moving in this market. Take care.